Mike from GYLD, and I welcome you to another installment of our weekly market review, where we go over some of the major markets and we try to review the previous week's price action and potentially outline some of the targets for the upcoming week. Right, so with the introduction out of the way, let's dive right into the charts, starting with the dollar index as usual. All right, zooming in, we can see that the gap that we discussed last week, we initially held below it, but we never got an impulsive move down followed by a pullback. So nothing to really short there, as it's a little bit of 50-50 at that point. But during CPI, market moved up impulsively, creating a new high. So right now, what I'm expecting is some pullback lower, so we can target new highs and potentially look to target these highs over here on a higher time frame basis. But that's a little bit too early to assume that we will hit this. But as of right now, we want to see some pullback lower and then target the previous high that we would create at that point. All right, so dollar is very bullish and pullbacks would be good to buy the dollar. Right, so we have euro dollar next. It's inversely correlated to the dollar index, obviously, so it's pretty much the same story on the dollars, right? So we broke structure to the downside as well. We took out this level, if you remember correctly. This is a level of liquidity that we assumed would be a target about 2 weeks ago. We finally met that price, so that is nice to see. But right now, just as with the dollar index, we need to see pullback higher, and then we could look to target new lows, right? Pound dollar, very much the same, nothing to really add here. We broke the structure as well. We broke out of this massive consolidation. So any pullbacks should be very good to sell. Actually, I really liked the pound dollar because the consolidation took a lot of time and we're finally moving out of it. So the pullbacks and any shorts could be very fruitful in the upcoming weeks. Right. Next up, we have gold. Gold continued making new highs throughout the week. Looking at the 4-hour, which is a little bit more cleaner, we can see that we're in a nice uptrend, making higher highs and higher lows. So the gold is very bullish. However, we have had some sort of, actually a very hard rejection on Friday, right? And we dropped down to some levels of support, but it will be important to see how the market opens on Monday and Tuesday. As looking at the daily, we are very overextended and we could use some pullbacks, some deeper pullbacks in order to buy again. Looking at zones like this or this original consolidation, before the move up happened. So any pullbacks on gold would be nice. As of right now, I'm not too confident in the buys, but we will see how the market opens beginning of the week, and if this zone holds, could be something to look at. But you know, with prices being so high, it is recommended to decrease your risk and be very picky with your positions, as we can see that a very impulsive move down came and it could come again and sweep a lot of traders out of the market. All right, so a little bit more careful on the gold in the upcoming week. We will see how the price behaves throughout the whole week, and then we can determine our directional buys for the upcoming week next session, right? So gold, I would be a little bit more careful. Next, we have the S&P 500. The S&P 500, it looks like it's trying to move lower. We still haven't broken any significant swing low, but looking at the 4-hour, we can see that we have a very nice sequence of lower lows and lower highs. So originally we've had this high, we took it out, forming a high. Then we broke lower, forming a lower low, followed by a lower high, and this sequence continues to go on, right? So this is something very interesting to consider in the upcoming week. Although we are bullish from the higher time frame perspective, just as with gold, we're pretty overextended and we could use a pullback. So if we get a pullback into these zones, anywhere within this zone, it could be potentially nice for shorts, but it is still a little bit early. So ideally we would see another impulsive move down on the daily, closing below this low, and then we could trade to the short side with a little bit more certainty. Right, and last but not least, we have the NASDAQ, or the US 100. And I do not like the NASDAQ as of right now. I prefer S&P, because if you look closely, we are still stuck within this consolidation and we're not really moving anywhere. We're around the middle of it and we're still stuck there. So until the NASDAQ moves lower or higher, there is nothing really to trade, in my opinion. Obviously, if you're trading ranges, you could potentially look to buy around the low of the range, or you could look to short around the top of the range. But as of right now, the NASDAQ is not looking the cleanest. So we need a little bit more time to determine where NASDAQ is most likely to go next, right? So that is it for the charts, guys. And let's dive right into the economic calendar. Looking at the economic calendar, starting with Monday, we can see that we have some news for the US dollar. We have core retail sales and retail sales, which is quite nice because Mondays usually tend to be slower, but they tend to be slower and there's not many news, but we can see that we already have 2 high impact news on Monday. And following up on last week's CPI, we could see some movements starting early in the week, which is very nice to see. Usually I like to sit out Monday to get more information for the upcoming days, as Monday usually doesn't move that much, but we will see. This Monday definitely worth watching. Right, on Tuesday we have a lot of news. It seems it's very packed. However, there is nothing really too high of an impact, but we have news for all the major currencies. We have some news for the Great Britain pound, we have some news for the euro, for the CAD, for the US dollar, and so on. So later on in the day we have New Zealand dollar CPI, but that's quite late in the trading day, so we would see the effects of it likely the next day would be best, right? On Wednesday we have CPI for the British pound and the euro, so this is a very high impact major news release, so market will definitely be making big moves on Wednesday, as we've seen last week with the CPI for the dollar. So Wednesday definitely worth watching. Personally, I would not get involved before or during the market news release, but afterwards we can look to see if the market provides us with some opportunity, right? On Thursday, we have some news for the US dollar. We have some minor news for the euro, but we won't consider that, as we are mostly looking for the high impact news, as they will be the news that drive the market higher or lower. So on Thursday, we have initial jobless claims for the US dollar, and then we have some manufacturing index and existing home sales, with some of the smaller news in between. So Thursday likely to be a very good trading day, following up on the previous day CPIs, right? So Thursday should be nice. And finally on Friday, doesn't really seem that we have many news. We have some medium impact news which won't be as important, or rather they will not cause such big moves as the CPI would, for example, right? So you can see we have some news for the British pound and euro, but other than that, Friday, not expecting much really. Price in the market will need to digest a little bit of the movement caused by the CPI, so we will have to see the CPI and sit on our hands essentially before market provides us with some opportunity, before the market shows us its hand, right? So that is it for this market review, guys, and I will see you next time. Cheers.